Filing income taxes is an annual chore that few people enjoy, unless it results in a big refund. But even then, let's hold on a minute. Is receiving a tax refund a reason to celebrate? Should you have more or less withheld from your paycheck? Let's consider a few pros and cons. First, the pros. Pro number 1, it feels like an unexpected windfall. Receiving a large refund from the government each year can feel like an annual bonus or unexpected windfall, a nice sum of cash to spend however you want. It's something to look forward to. Pro number 2, it can be put to good use. A tax refund can be an ideal opportunity to pay down debt, build emergency savings, or invest for the future. It can help defray the cost of necessary medical expenses or home repairs. Even if no major financial challenges exist, a tax refund can be used to invest in oneself by enrolling in a class, joining a health club, or taking a much-needed vacation to relax and recharge. Now let's look at some of the cons. Con number 1, it means you overpaid the government. In reality, a federal tax refund means you paid Uncle Sam more than necessary during the previous year. Your refund is repayment of the money that should have been yours in the first place. Plus, you could have been putting that money to work somewhere else like a retirement fund, investment account, or other investment. Instead, Uncle Sam held onto your money and returned it at 0% interest. With inflation rates rising, that money actually has less buying power now than it did last year, so you essentially lost money. Con number 2, it may not be put to good use. With an unplanned windfall in hand, it can be tempting to splurge on a shopping spree or a really pricey night out on the town. Activities that may feel great in the short term, but don't typically contribute to lasting financial stability or emotional well-being. If you usually receive a tax refund each year, you might want to ask yourself whether it would be more beneficial to put that money to use when it's earned rather than when it's returned. If so, consider changing your withholding status at work to have less of your earnings funneled towards taxes each pay period. And if you do adjust your withholding so you're taking home more each pay period, one way to ensure that your money is put to good use is by increasing the amount you contribute to your employer-sponsored retirement plan. If your contributions are pre-tax, this move will also help reduce your annual tax obligation. Taxes will be due eventually on those contributions and any earnings, but that usually occurs when you take distributions from your plan, likely in retirement. If you have questions about adjusting your withholding or changing your plan contribution amount, contact your employer's Human Resources Department. And there you have it, a little food for thought regarding income taxes, withholding, and tax refunds. If you found this video helpful, be sure to share it, like the video, and subscribe so you don't miss out on future videos. Before you go, do you want to learn more and see more lessons like this? Check out the PERT Retirement Roadmap for teachers and public employees. This is a comprehensive, simple, and easy to follow guide taking you from A to Z on how to get started and understand exactly what you need to know and do in order to prepare for retirement and be financially well. Click the link in the description below to learn more.